I'm Jennifer Ruelens, landlord, educator, and advocate, and broker of One Focus Property Management. You know, the thing I get asked most often is, tell me about the market. What's happening out there? What are tenants doing? What are rental property owners doing? And I'll bring you all of my market insights in this video as of June 2021. We keep hearing about how the end of the eviction moratoriums is going to mean an eviction avalanche. I can't speak for other markets, but here in north central Pennsylvania, I don't think that's true. I think it's going to be much more accurate that we're going to see an uptick, not an avalanche. Now, here's why. Our local judges have been following these moratoriums really literally. So they've been doing a great job of balancing the directives of the CDC and the government along with the practical real world concerns. So I do think that there are some cases that will be pushed to eviction when those moratoriums lift. But again, it's an uptick, not an avalanche. I don't think it's going to play a significant role in the rebalancing of the market after COVID. Our housing market is very strong locally. Same is true across the country, but locally we're seeing a special strength in our single family home prices and in our rental prices. So a couple of things driving this price increase. Well, it's always, it's a combination of supply and demand. So supply is being driven by what they're calling the second great migration, where people are now migrating to where cost of living is lower and quality of life is higher because they're not as tied to their jobs anymore. So our community here in north central Pennsylvania is the kind of community that people want to live in if they were able to keep their jobs that were possible in larger metro areas. We also see two things restricting availability of housing units. One, construction is down. Construction starts are down because the price of construction materials is so high. Go try to buy a door or an appliance and you'll see what I'm talking about. So with construction being slow, we don't see new housing units coming on the market. Also, I believe, especially in rentals, these moratoriums are holding units off the market. Fear of not being able to enforce your lease is going to make, and I know personally people who are doing this, and I hear from people who have had their apartment units empty during part or all of the pandemic out of fear of the moratoriums. So when we have more demand and lower supply, we're going to see those prices increase. In our portfolio, I can share with you a couple of statistics that are true through all of 2021. One is we've been running a 99 to 100% occupancy in our residential portfolio. We are averaging increase of rents on 5% a month, and we're seeing annual renewals at 75% or greater. That does mean that 75% or greater are committing to at least a one-year lease. The balance of those are going month to month, or in some cases vacating. So we see a very strong performance in our portfolio, and we're trying to take advantage of all the market trends. If you love hearing about the market and looking at different kinds of trends, you're going to love looking at what Penn State puts out. So Penn State and the real estate department at their Smeal School of Business has actually put together a Penn State alternative inflation rate. It's something they publish regularly, and it comes from the real estate department, actually professors that I studied under, Drs. Ambrose and Yoshida put this data out, and they just put an update out in June here this month with a couple of conclusions. I'll link to the update and to the nature of the alternative inflation rate if you're interested in the comments of this video. But what they came to were two conclusions. One was that they're seeing the increase of single family home pricing, and it has been outpacing rental inflation. However, we see that rental prices have now caught up to that. So both sectors are being affected about equally. And then we also see that they said with this last 4 months, there's been an upward trend in this alternative inflation rate that they calculate. What that's indicating is a widening, a deepening of the divide between supply and demand. So housing affordability is still going to continue to be an issue in our country and locally. What we can do is, of course, be smart investors and run our businesses as well as possible. If you like this video, I hope you'll share it with a friend, subscribe to our YouTube channel, and just share. This is great information, and I hope you enjoyed it. Please let me know. Are there things you'd like to know about the market that I could share with you? Give me a comment. I'll make you a video. Bye.